Taking you out to a live image over the White House in D.C. as we get to a big story that we are following here, breaking overnight. President Trump's 10% universal baseline tariff went into effect, with U.S. customs agents collecting the tax on all imports from many different countries. The higher taxes on goods from more than 50 larger trading partners expected to begin next week. This initial 10% baseline tariff took effect at U.S. seaports, airports, and customs warehouses at 12:01 a.m. Eastern Time. President Trump announced the tariffs during a news conference Wednesday that we brought you in full here on Live Now from Fox. The stock market has been responding. It's seen a couple of fairly rough days following that unveiling. The Dow plunging over 2,200 points, or about 5.5%. The NASDAQ composite losing 5.8%, and the S&P 500 down 6%. A lot to break down and discuss here, so I do want to bring in Dr. Ashish Sadai, an assistant professor of economics at the University of Texas at Arlington. Thank you so much for taking the time to be here with us today.
Thank you, Josh.
All right, so first off, the big question I do want to ask you overall, as we see these numbers from the stock market and folks reacting there on Thursday and Friday, what does that tell us about all of this? Does it tell us anything?
It tells us that the markets are reacting because there is uncertainty with regards to, what is going to happen. How are these, trade relations going to settle down in the future? So the markets are reacting in the sense that because there is a lot of uncertainty in the markets as to how these trade negotiations will play out, and are these going to be, sequential kind of tariffs, or is it going to be a one-shot kind of a tariff? So the markets are just readjusting their beliefs as to, what is going to happen in the future with regards to the trading relations.
What sectors or maybe industries are at this point most vulnerable to retaliatory tariffs from trading partners?
Broadly, any sector that has a lot to do with manufacturing abroad would be affected by these tariffs. Not only those, but directly those industries which have a lot of manufacturing base outside the US would be affected the most, as compared to others, which would also be affected, but to a lesser extent than the ones that are manufactured abroad. You can think of, technology, automobiles, computers, tablets, all these kinds of, products that are assembled not entirely in the US, but outside, may face more vulnerabilities in the short term because of the readjustment in the process of production.
Could all of this possibly trigger some kind of trade war? And if that were to happen, how exactly would investors respond? Do we have kind of an idea or a picture of what that would look like?
A trade war is a talking point, but it is not an inevitable outcome. So I'm not sure if we should just simply think of a trade war right now. We could think of more of negotiations going forward rather than having a complete trade war kind of a situation. A trade war could be possible if these retaliatory tariffs are more sequential in nature, in the sense how firms are going to react if all countries also kind of want to double down and increase tariffs and things like that. We might see some kind of an escalation towards a trade war, but right now I don't see a trade war happening directly. It's more of a talking point, not an inevitability.
We did hear from Fed Chair Jerome Powell just yesterday. He kind of spoke about the situation unfolding. He was asked questions. So I'm not sure if you can provide some perspective, but what implications could this have possibly on inflation, interest rates, and how might the Fed overall actually respond to the tariffs?
Regarding inflation, Josh, inflation is the general interest in the prices of goods and commodities at an aggregate level. Here we are talking about the increase in prices due to frictions in exports and imports. So we should not expect an overall increase in price level for all goods and commodities directly. We could think of, all essential exports and imports that we do, for example, food, items, you could think of your daily food items, groceries, which could get a little expensive in the short run. But as price adjustments happen, I believe that, inflation, if it at all increases, would be somewhere in the bandwidth of 0.03 to 0.06 increases in the CPI in the US in general. So, and in terms of the changes in interest rates, we have to also take into account that the domestic market in the US and how the interest rates have been behaving in the past 5 or 6 months. So whatever adjustments are going to happen to the interest rates and inflation would not just be in response to the tariffs, but would also be dependent on what is going on in the American economy in the past 1 year or so.
What impact overall, and again, a lot of this is questionable because we're trying to figure out how everything is going to play out, but what sort of impact could this have on the value of the US dollar?
It is uncertain right now what impact it could have in the value of the US dollar, in the sense that, technically, if tariffs are being levied, what would happen is, to pay those tariffs, you would need more American dollars. So American dollars could appreciate in response to that. But it all depends on how the trading relations are going to be moving forward. If all goes well, I would not expect a much change in the value of the US dollar. But if there is, for instance, a higher demand for the dollar because of the higher tariffs, then it could just increase the value of dollar, because of which our exports might be affected. But that all again depends on, how long is this, negotiations or readjustments going to happen, and how much of that would have an impact on the dollar in the long term.
Why should the average American out there who is maybe watching this right now, they hear a lot of numbers, they hear stock market, tariff, why should the average American be paying close attention to all of this?
The average American, buys groceries, wants to buy a car, wants to buy a house, wants to buy stocks, wants to buy shares and things like that. So all of these things are at the current moment having some fluctuations. We can see what happened in the stock market in the past 2 days. There's been, as you mentioned, 5 to 6% corrections in all kinds of stocks here. So the average American, if it's investing in the share market and things like that, is concerned of what would happen in the long run, or in the next few days, in this case. So that's why I think, in terms of the average American can think of also in terms of getting the stocks of food items, necessary items, which are imported from other countries, in stocks and things like that. But I think these tariffs impacts cannot last forever. It would be transient in nature, so the average American could not lose their sleep over it.
All right. Dr. Ashish Sadai, thank you so much for taking the time to join us here and help discuss this further. Anything else that I forgot? Anything you want to mention before I let you go?
I think that's it. Yeah. Thanks, Josh.
All right. Thank you so much. Have a good rest of your day.
You too.